If you still don't understand the Silver Bullet strategy, this video will break down everything you need to know. So by the end of this video, you will know how to trade the Silver Bullet strategy guaranteed. I'm also going to be including which session has the highest win rate for this strategy and what would invalidate a trade for this setup, which nobody is showing on YouTube. A lot of people are overcomplicating it and teaching it wrong. So in this video, I'm going to give you a completely simplified guide that you guys can follow step by step. ICT himself said there's no better setup than this strategy, and you can quit your job from this one strategy alone, and it works every single day. It's worked almost every single day this past week, so I'm going to break down every single trade step by step. I'm going to be using the exact same setup that I'm teaching you in this video, and it's going to be consecutive days that I'm showing you examples on. So it's a very simple strategy, but it's so misunderstood. By the end of this video, you will know how to trade the Silver Bullet strategy. Let's get started. We're going to be trading two sessions only, the London session and the AM session. These are the two highest probability sessions where the best quality trades show up for my own testing, and you guys can go and test this yourself and you will see similar results, that the best trades happen in these two times only, not the PM session, the London session and the AM session. So this is a refinement that no one else is showing, and this is going to give you the best quality trades, and my time is set to New York time. Now the time frame we're going to be using is the 5-minute time frame only. I've said you can use the 1 minute before, which is completely valid. You can still use the 1 minute if that works best for you. However, the easiest time frame to trade the setup on is a 5-minute time frame, and this is where you will find more consistency. So we're going to be using the 5-minute time frame only in these two sessions. Now let's get into the actual setup. So first of all, we're going to identify two things: the FVG and the main draw on liquidity. That's going to be our main two concepts that we're going to be using for this strategy. So as you can see on this diagram right here, we're going to look for our draw on liquidity first. So as you can see, before our time window, before our 1 hour session opened, we're going to let price do whatever it wants. We're going to let price print out its own data. So as you can see, price made a high, made a low, swept liquidity to the upside, and then broke market structure shift to the downside. So after that market structure shift over there, price made a lower high, and then it made a push to the downside again, making another market structure shift. You can call it breakout structure, change of character, market structure shift, whatever you want. It's all pretty much the same thing. However, we know that price is bearish from this point onwards. Now we know our draw on liquidity is to the downside. We're going to look for discount arrays. We're going to look for lows to target the opposite side. Okay, so as you can see, we've got buy side here. We're going to be targeting sell side. So our draw on liquidity is sell side liquidity. We're mainly going to be targeting equal lows, old session lows, previous day lows, that sort of thing. However, the easiest way to spot these are equal lows and old lows in general. And you can also look for discount arrays because we are moving to the downside, so we're moving from premium to discount of the range overall. Now, we're going to look for our first FVG towards the main draw on liquidity. Now, this is a point where a lot of people mess up. They just look for the first FVG and they don't take the draw on liquidity into account at all. So they just trade the first FVG that's been created and they trade it blindly, and then they end up getting stopped out. But you have to look for confluence with that FVG. So first of all, look for that first FVG towards the main draw on liquidity. Draw on liquidity is bearish, so we're going to look for a bearish fair value gap. Keep it very simple. Keep it as simple as possible. Then we're going to look for a balanced price range and a fair value gap present, and this is a very high probability hack that I've shown in a previous video, and the link to that will be in the description below if you haven't already watched that. After this, we're going to look for confluence with the fair value gap. So we're going to look for liquidity sweeps, market structure, PD arrays, that sort of thing, basic knowledge to look for confluence with that fair value gap. So as you can see, this fair value gap's been created here. We've had a liquidity sweep to the upside previously, and we've had a market structure shift. So now we know our market conditions are bearish and we are trading towards the draw on liquidity right here. Now another key point is that we're going to look for 10 handles for our minimum trade framework for indices and 15 pips for our minimum trade framework on Forex. So when we're looking to take our Silver Bullet trade, we're going to look for at least 10 handles worth of movement in our direction. Okay, so this is basically a key point for taking profits, and this is the entry system. This is a completely simplified version. A lot of people are overcomplicating it and they're teaching it wrong, but this is the highest probability setup, and I've refined it to give you the highest probability sessions. And as you can see over here, another refinement that I've added is the 50% of the fair value gap. So the consequent encroachment, the mean threshold, whatever you want to call it, is basically the consequent encroachment is the 50% of the fair value gap itself. FVG is made up of 3 candles. If you haven't watched my fair value gap video already, I highly recommend that you watch that, otherwise you will be stuck when you're trading this strategy. So you need to know what a fair value gap is, and the link to that will be in the description below. So where do we put our stop loss, where do we put our take profit? So we know our main draw on liquidity, so our take profit could be at the draw on liquidity, or it could be at a solid risk to reward of just a 1 to 2 risk to reward ratio, okay? And this works out very, very well, especially on indices. So where do we put our stop loss for that? You can either put your stop loss above the high of the FVG overall. You want to place your stop loss either above the high of the fair value gap, or you want to place your stop loss above the body of the first candle that makes the FVG. And you'll know on the live market examples, you can also either take profit at a solid risk reward of a 1 to 2 risk reward, or you could target the overall draw on liquidity. However, we want our fair value gap to be created within our time window, and we want our entry to be within the time window. So let's get into the live market examples. We passed a $200,000 challenge for a client in 4 minutes. In 4 minutes, this client was funded $200,000 in trading capital, and they can go trade on that account live and make real profits. 1% on that 200k account is $2,000. 5% a month on that account is $10,000. So you guys can get those 10k months realistically from this one funded account alone. We fund our clients in minutes thanks to our perfected automated trading bot that passes challenges in minutes. We have the fastest passes in the industry, and it's a zero risk investment. If we fail the challenge for you, you get a full refund, 100% guaranteed. However, we've never ever failed a challenge, so you will be funded. That's 100% guaranteed. We're giving you the golden opportunity to get funded, 100% guaranteed, and it's the smartest business decision you guys will ever make. You also get free 1 month access to the signals room after we pass the funded challenge for you and get you on the live funded stage to learn how to take trades on your funded account. And the signals room by itself is $30 a month. We reduced it from $100 a month to $30 a month. Our clients made thousands of dollars from this one trade alone, and all the proof is on my Instagram, so if you haven't already, go follow that. And I've reduced it from $100 a month to $30 a month because I want to make it as affordable as I can for everybody. But I only want serious people in there, so the price will be increasing very, very soon. So make sure you get in whilst you still can for just $30 a month, the most affordable price for everybody. And if you want your funded challenge pass 100% guaranteed, the link to this will be in the description below, so make sure you join up and get funded instantly. So this example will confuse a lot of you, so make sure you pay attention to this one. And also I'm going to show the examples of every single day from the London session, so you guys can see what it's like from the first session of the day when you're trading live with this strategy. So I've delineated the time window 3 AM to 4 AM. This is the London session right here. Overall, we can see the institutional order flow is bullish. Bullish order flow is being respected. As you can see, we've got order blocks being mitigated, bullish order blocks being mitigated and respected. Prices moving to the upside. So we know that institutional order flow is bullish and prices made a high right now. But where's the first FVG created after our time window? So we'll wait for the next candle. Now, a lot of people would say this is the FVG. But the answer to this is that this was not created after our time window. All we're waiting for is a bullish FVG. Why a bullish FVG and not a bearish FVG? Because as I said, the institutional order flow is bullish, and I'll show you why anyone that looks for any FVG to be created without looking at the draw on liquidity will be faked out. And also just a reminder, you don't need a daily bias for this strategy. However, having a bias is highly recommended. Now, as you can see, we're just waiting for that first FVG to be created. So let's see what happens now. Okay, as you can see, price made a bearish fair value gap to the downside, right? As you can see, price made a bearish fair value gap. So a lot of people, they'd look for this bearish fair value gap. They'll enter sells off this fair value gap, and what will happen to them? They'll end up being stopped out completely. And as you can see, price completely reverses in the opposite direction. The correct way to trade this is to use this to your advantage. This bearish FVG, you have to use it to your advantage. So what do I mean by this? We already established that institutional order flow is bullish. What's price just done? It's tapped into a bullish PD array, right? This discount array right here, this order block. Price has perfectly mitigated that and also filled in this fair value gap. We don't have to mark out every single point of interest on our charts. No, we can just mark out the main ones. So we know that price has reacted off a bullish PD array right now, and institutional order flow is bullish, and price has also swept liquidity from this low right here. So now we know that price is bullish and can move to the upside. So we're not going to be using this fair value gap to trade off. We're going to be using a bullish fair value gap. So let's see if a bullish fair value gap is created on the 5-minute time frame. Okay, now as you can see, 1, 2, 3 candles created right there, and the FVG is perfectly created right there. Okay, so all we're going to do is we're going to look for our entries off this fair value gap right here, and what you can do as a refinement is mark out 50% of this. Now also remember, the second step is their balanced price range. Is that fair value gap in is there another fair value gap in alignment with our bullish fair value gap, and we're using the bearish fair value gap to our advantage? And the answer to this is yes. As you can see, this is a balanced price range right here, so this is an even higher probability trade. You can put your stop loss over here if you want to be really aggressive. However, I would at least recommend putting it below this low right here, and you could target a solid 1 to 2 risk to reward ratio right here, which would land you perfectly at this high right here, this liquidity high. If I get rid of this for a second, you can see that there's a perfect buy side liquidity resting above the high right there. So this is going to be our entry that we're taking from the first silver bullet trade. As you can see, price taps into that perfectly, and also if you entered off 50%, you can see how the risk to reward increases over there and you get a better entry. So let's see what price does. Price moves to the upside. Again, even if you entered at the top of the fair value gap, that's completely fine as well, because price still went in your direction. So now what do? Do we trade the second session after this? And the answer to this is, if you already have a winning trade in the first session, why trade the next session? And this is a mistake a lot of people make. They overtrade. All you need is one winning trade a day, and then that's all you need. And remember, less is more. So we're going to stop trading for this day, and this could be our trade done for that day. So let's get into the second example. So again, we're at London session 3 AM right now, and quite clearly you can see that institutional order flow is bearish. Bearish order flow is being respected to the downside, right? So price is overall moving down, but price has made equal lows right here. So could we see a buy up to this order block area right here on the 5-minute time frame? This area, or you could mark out the area of supply overall. So we're going to wait for price to show us its direction overall. As you can see, it swept liquidity from this low right here. Could we see a reversal in the opposite direction, taking out this high, tapping into this order block area? Okay, as you can see, there was a slight fair value gap created here, and usually I like seeing bigger fair value gaps being created. Let's see if we get a tap into this, take the trade higher within our time window. Okay, so we're going to put our stop loss at the body, and we're going to place our entry at the top of the fair value gap. Take profit here. I wouldn't be happy with the take profit. There's not enough handles for this trade, so let's see what happens. So as you can see, price didn't tap into our area during our time window, so we're not going to enter this trade, but price did mitigate into this order block area, this whole supply area right here. So now price is most likely going to reverse in the opposite direction. Let's see what happens to this trade when you take the trade outside of the session and you don't follow the rules. Instant stop loss hit, and again you blame the system for not working, but you're not trading it correctly because a lot of people aren't teaching it right. So this is the right way to trade it, guys. You want to take trades within the time window and ideally get out in your time window as well. They're the best quality trades. So now all we do is wait for the AM session, because the London session didn't give us a setup. We're going to wait for the AM session. So now we're at the New York session, and as you can see, we're at 10 AM right now, so it's only a 1 hour window, and we're still on the 5-minute time frame. We're sticking to the rules. So as you can see quite clearly, institutional order flow is to the downside, it's bearish. Bearish order flow is being respected. So overall, we're going to be looking for sells if a bearish fair value gap is created, right? So all we're waiting for is that bearish fair value gap, and then we can look for our main draw on liquidity. And as you can see with 1, 2, 3 candles right here, this fair value gap was created. And what makes this a good fair value gap is it's energetic. It was a fair value gap with displacement, right? So what you can do when the fair value gap is pretty large like this is mark out the consequent encroachment, the 50% of that fair value gap. So we're going to mark out our entry right there at the 50%, and we're going to look for the entry within our time window. You could put your stop loss above the high overall, or you could put it at the bodies right here. And then you want to target just either a solid 1 to 2 or the next main draw on liquidity. And if you look left, if you guys can backtest this yourself and see what's on the left. However, I just want to show you what happens right now. So as you can see, it tags us in right there. And where's the next main draw on liquidity? Right here. So you can either target this low right here or a solid 1 to 2. Let's see what 1 to 2 does right there. And as you can see, price perfectly wicks us out at a 1 to 2, but obviously it would be safer to get out at the main draw on liquidity level, which is this low right here. We've got an old low, we've got sell side liquidity below these lows. After price takes out that low, very high chance that price will reverse. And again, what was in common with a successful trade? It was within the time window. It was a fair value gap with displacement. It didn't have a balanced price range, but it did have the fair value gap with displacement, and we were trading towards the main draw on liquidity, which was to the downside. So note these things down and make sure you remember that we're trading towards the draw on liquidity within our time window. Let's get into the third example. So now again, we're at London session the day before that last trade. So I'm doing trades from literally every single day this past week to make it as easy as possible for you guys. This is the London session, and this is an example where I wouldn't take a trade and where a trade would be invalidated. So make sure you guys watch this one carefully. So as you can see, where's our order flow? Price has swept liquidity from these equal lows. Liquidity rested below these lows, and there was an order block region right here which price has tapped into and now had a bullish reaction off. So we're waiting for a bullish FVG to be formed, and then we could target our main draw on liquidity, which is this high right here, relatively equal highs to this high right here. So all we're waiting for is that bullish fair value gap to form. And as you can see, we got a bullish fair value gap right here. But let's see what price does right now. And again, remember, we want our entry within our time window. So let's say even at this point right here, right? We want our entry within the time window. As you can see, price didn't tap into our entry within the time window, so we're not taking that trade. Let's see what happens to that trade when it's outside of the time window. It stop loss straight away. So this is why you don't take trades outside of the time window. And a lot of people on YouTube aren't showing you this, but this is a major key point. And I'm showing you the examples from every single day. I'm showing you consecutive examples from the start of each day, being completely transparent with you guys, so you guys can backtest this yourself the exact same way. Now let's get into the AM session, because you didn't find any trades in the London session. Again, as you can see, institutional order flow is bullish to the upside. Price made a market structure shift with this high right here. Price has swept liquidity, and we have unlocked these highs as our main draws on liquidity, right? So got this high right here, and we got highs and gaps, imbalances, fair value gaps on the left of price, which is also our draw on liquidity. So let's see what happens to price now. Ideally, we want a bullish FVG to form and the entry to be within our time window. Keep it very simple. So as you can see, this is the fair value gap created right here within our time window, and all we're doing is waiting for that entry to be triggered within our time window. Okay, not outside, within our time window. And let me just mark it out for you guys can see. So 10 to 11, and we're sticking to the rules. It's the exact same system I'm showing you guys. So as you can see, price didn't tap into it within our time window. If I get rid of this right here, this candle did not tap into this fair value gap, so it did not tap into it within our time window. Let's see what happened to the trade. Instant stop loss hit because you didn't stick to the rules and you didn't take trades within the time window. Just a reminder, if you want to get funded 100% guaranteed, zero risk investment. If you fail the challenge, you get a full refund. However, we've never ever failed the challenge, so you will be funded. That's 100% guaranteed. We've got amazing reviews, amazing testimonials, all on this group right here, and the link to this will be in the description below. Make sure it's this link specifically, not any other groups. And if you want the signals room by itself, we're smashing the take profits in the signals room. The link to this will be in the description below. It's $30 a month. I've reduced it from $100 a month. So if you want to join for a discounted price of $30 a month, the price will be increasing back up to $100 a month very, very soon. So get in whilst you still can. And if you want to get funded 100% guaranteed, join this group right here and get funded and actually take action. It's a zero risk investment. It's a guaranteed pass. It's the smartest business decision you will ever make. The risk is zero. The reward is unlimited. You can make as much money as you want on that live funded account. And after you pass the funded challenge for you 100% guaranteed and get you on that live funded stage, you get access to the signals room for free for 1 month to learn how to take trades on that funded account live and make real profits. Don't waste time trading your own funded challenge. Don't waste time on demo. Don't waste time failing your own challenges. Get funded with us 100% guaranteed. The link to this will be in the description below, so take action now. So that's it for today's video. If you know a friend who's struggling with the silver bullet strategy, send this video to them, because this is literally the simplest strategy, and I've shown you the live examples of this exact system that I'm showing you working live in the real market. So guys, make sure you stick to the strategy, make sure you stick to the rules. It's a rule-based idea to look for a time-based model. Don't force trades. Be patient, and remember, stick to the rules. Share this video with a friend who's struggling, and that's all for today's video. I'll see you guys in the next one. Peace.